Good morning, traders. It is Monday, August the 5th. Taking a look at the charts, we got some big price action today, and it is in our favor. If we look at the SP 500 daily chart on the main chart here, you can see over the last couple of weeks, we've been getting into the type of market conditions that we saw back in May before we saw the top and this big three-wave correction. We started to see the breakdown. We ended up doing a trade here. We were short, and the market is collapsing. This is today's bar. This is the today's daily price action. So we're continuing to move down. The Nasdaq's down over 2%, SP 500 down 1.5%. So pretty good drop today. I feel like it's going to be some type of oversold washout drop, meaning it could rally very easily today. Our momentum in our short-term cycles down at the low here are driving down into this oversold territory. Our pink line here is trending down. We are in a down market, and very similar setup to what we saw over here, where we've got the trend going down, or our longer term cycle going down. And more or less, we're starting to get actually into an oversold condition. Not quite where we get a cluster of them all, but more or less, if you look at this move down and this move down, just visually, they look roughly the same. So everything is going to be oversold, and we could see the market rally here. So I just sent out a trade alert to buy a quarter of your position, or sorry, sell a quarter of your position in SDS, which rises as this falls. SDS having a nice pop up today, and then it's we move our stop. To make sure you look at the stop, it'll move up to our first target, which was the $30.85 mark. So we want to protect our gains in case this has a knee-jerk reaction to the upside. We want to make sure we get out of SDS the final portion, quarter, for a gain as well. Now, if we take a look over at, let's just go over to the VIX. We got panic selling today in the market. You can see the VIX spiking up. Back last time we saw the pullback in May, this is the same level of fear we saw. So this is another thing saying we could be at a intermediate low here or some type of bottom. It doesn't, all it means is the fear is at this level. Price can continue to sell off. In fact, we saw the low in the market over here. The VIX, the initial fear for VIX spikes first. Typically, we'll see the VIX actually go lower as the stock market falls afterwards. So this is the initial spike in fear, and the VIX could fade while the stock market actually still drops. It's the initial spook is what makes everyone's heart jump, and then they kind of deal with it, and it takes a lot more to scare them later. Even though prices continue to collapse, the VIX doesn't really take off. So that's kind of where we're at in terms of the fear in the market. And if we look at the rush to safe havens today, we'll take a look at gold. Gold's up 1.2%, pushing higher. If we look at silver, it's up 1.2% as well, pushing higher. And more or less, if we take a look over at let's go to the GDXJ. We are long gold, or the silver miner, but it doesn't show pre-market really. But you can see we got a nice pop and a breakout in miners. Silver miners are trying to do the same thing. They're trading sharply higher as well today. And of course, we got in on these markets. We've got an oversold level. We got into the silver miners. Let me just go to the silver miners so you can see it. Here's the SIL. SIL, we got in down in this oversold territory, formed a nice bull flag. And the market, in pre-market, if we were to do a Fibonacci extension, we go from the low to this high down to this low, and we've got these upside targets in the market. So we've got this low, we got the rally, the pullback, and the next moves are going to be here and up here, right across here. So right now in pre-market, we're trading at 2870, which is somewhere right about this red hashtag. This hashtag means the market is going to gap, or it's going to be trading into overbought territory. So it'd be a big gap up. We could see price fade back down on this fear before it continues to go higher. But overall, nice move today, and we're definitely getting some upward momentum in the market. Now, if we take a look over at crude down another 2% this morning. I'm just going to go to the regular daily view here. Here's crude moving down. It's a huge drop last week, had an oversold bounce, and looks like it's starting to break down. And the downside potential is around this 51, this previous low. And if we did a Fibonacci extension on there, you could get an idea of where that downside target is based on simple Fibonacci targets. You go from here down to this low, up to this high, and that gives us our downside targets for crude. So if we look at where crude could go, it's sold off, it bounced back up, and then the downside move is 51.63, which will happen to be right in line with these previous lows. So if this continues to carry on today, maybe it forms a larger bear flag first before breaking down, or it has a super high momentum move and actually just drops in the next day or so. But this will be the next key support zone for crude if it hits that level. We were in here as a net short. We got shaken out. We had the Fed. We had a bunch of news. This pop, this hook shook us out of it, and then it tanked without us. It happens. But anyway, move on. Next trade, and we'll keep our eyes open for some potential setups here. If we take a look at natural gas, we can see our trend analysis chart to the downside. It's red. It did bounce up, it got overbought, hit the 20-day moving average, and it's dropped very sharply last couple trading sessions. Today, this is a third big down day. We're getting down to this really key level here, it's hard to see, but we're getting down to this $2 mark. This $2 mark we talked about a few months ago. I might repost that article and you can read about it. We're talking about natural gas trying to get down to the $2 mark, August, September timeframe. It could set up for a very big upside move. And we'll have to reanalyze the charts, look at the weekly charts, go way back in time to actually get a gauge of where we want to get in. Because if we go back in time here, you can see, let's just zoom out a little bit. You can see these lows have been kind of working themselves down, lower lows each time. So we had a low here, and then we had a lower low, and then we had a lower low. So there is potential for natural gas to really to still make a lower low, come down to this 150 mark. So we're going to see how things start to play out. I have a feeling we're going to get into some pretty big volatility. If you look at the price action in these areas, I think we'd be getting into that same type of price action, meaning we see price drop, we see huge bounces, we see big collapses, huge rallies and sell-offs. You get into this volatility. Same thing happened over here. We had a huge drop intraday, came all the way back up, back down. Huge volatility, very tough to trade or to stomach. And here we're getting into the same type of thing. We could see a drop. We could start to get into this wild volatility and eventually have some type of breakout to the upside where we get a nice significant move from this level and go forward. So we're going to let the market kind of do its thing. It's going to be pretty volatile if you're trading natural gas. There isn't a great way to trade natural gas that I know of. The ETFs lose value over time. So even if you're right, by the time this can shake out, keep in mind, this is the weekly chart, weekly chart. So we're looking at potential multi-month bottoming formations in natural gas, and you do not want to hold natural gas ETFs more than a couple weeks, really, because they lose a lot of value. So we'll keep our eyes peeled, but overall, it is starting to get to a point here where we're looking for a significant lower low or significant bottoming formation to form going forward, and a rally. Anyways, that's really it for this morning. It's going to be a wild session. Should be good. It's in our favor at this point, but huge gaps today, and gaps tend to get filled. So I'm not a huge fan of gaps in our favor. I actually like gaps to the downside because when we're long, because usually it's an oversold panic sell-off, and then we see the market rally in our favor. So big gaps today. It's going to look good at the open, but some of that or most of it could be faded back by the end of the day. So be mentally prepared to see some of those vaporize. That's why we're taking partial profits on SDS, lock in some gains in this overbought, this oversold condition in the market because it could fade after the open. Talk to you soon. Bye-bye.